And here's where the federal government shutdown sits on day 27. Senators will return today for a vote on a short-term spending bill as the government shutdown enters a new week. This will be the 13th time they will try to reopen the government, but it remains deadlocked on health care subsidies. Senators will also vote again on a proposal that would pay some federal workers through the shutdown. The new inflation numbers are out, and the government made sure to release them despite the ongoing shutdown. We're talking about September figures from the Bureau of Labor Statistics. They show consumer prices rose 3% compared to last year, signaling inflation remains above the Federal Reserve's 2% goal, even as the pace cools slightly. Now, some prices remain on the rise. Fuel costs jumped more than 4% last month, pushing transportation and delivery expenses up a little bit there. But one area which saw some cooling, the cost of rent in the nation for the first time in months remain for the most part flat, offering a modest break for renters and homeowners across metro areas. All right, let's look into these numbers and try to find some good in them. We have our financial expert, as always, Andrew Poulos. Welcome back to the show, my friend.
Good morning, Chesley.
All right, 3% increase on inflation. Not as bad as some feared, but still above the target. So what does this really mean for the average household right here in Metro Atlanta?
Yeah, we're not going to probably see that 2% that the Fed has wanted to get it down to. I mean, clearly, the Fed's 2% target may be unrealistic at this point. Let's put it that way, right? So what that means is that this may be the new norm, the 3%, if we can keep it around here, and it covers around 3%, maybe slightly below 3%. That might be what we all get adjusted to. I'm just looking to see what happens because of the government shutdown and the tariffs. And will we basically start seeing teeter up in the coming months?
Well, why was this particular report so critical? Could it get out during the shutdown here? And what does this tell us about the overall direction of the economy?
Yeah, I mean, it's telling us that we're staying steady right now. The question is, sort of, I'm kind of glad that we actually got a report considering that the government shut down. I think that was imperative to keep the markets intact and not have the markets with a negative reaction. But overall, we're just not basically seeing inflation come down now, so we basically have to just wait and see what's going to happen and what kind of impact the government shutdown is having or will have in the coming weeks. I mean, we've been shut down for almost a month now, and then we've got healthcare issues coming up here because open enrollment for anyone that has healthcare through the healthcare.gov for the marketplace begins this weekend, and that's going to have a huge impact on a lot of sticker shock folks.
Yeah, how do you interpret this cool down for us, Andrew? Is it a sign of we're turning the corner finally, or is this just a temporary breather?
I think, look, I personally think it might just be temporary. I think that basically people are getting exhausted of what's been going on and the higher prices, and a lot of folks just don't have that money to spend, right? The personal consumption, what's disposable, so to speak, versus what's necessary. So you still have to shop at the grocery store, but maybe other things that aren't as necessary, people are cutting back on. And we're about to see, because we'll get into the holiday season in just a few weeks. We're going to have Black Friday coming up, so we're going to see a lot of reports going to come out from there to see how people do. Do people shop on Amazon? Is it steady with previous years, or is it going to be a cool, calm spending year come Black Friday and going into December?
You know, food prices still is one of the biggest pressure points out there right now. Where do families see the most sticker shock right now, and what practical steps can they take?
I mean, it's difficult, right? All of us, we go to the grocery store and we can see it, we can feel it. I mean, what you used to buy, for example, what you used to buy for $10 now is costing upwards of 14 to 18 bucks in some situations. That's still a elevated price. Are those prices coming down? Not too much. So you're starting to see families where they're alternating their budgets. They're starting to figure out what can they cut somewhere else to be able to afford things. Between housing and fuel and food prices, I mean, there's a significant portion of household budgets is going to those three things right now.
All right, we got about 30 seconds left. Can you tell us what's the biggest single takeaway from this inflation report that people should know right now?
Listen, you got to budget your money, and you got to expect that probably we may get into another period of higher inflation as we go on. Fed begins to lower rates some more. People may get more comfortable. They may see the pressure easing, which will allow them to start spending more. So I'd be very cautious just to read the ticker headline, which is, hey, inflation is cooling right now. We've got to see what's going to go on in the coming weeks once the government reopens, hopefully here.
All right, our friend Andrew Poulos, thanks so much for joining us. Really appreciate it.